The volume profile is essentially the same thing as a market profile without some nuances and the anomalies that market profile is showing us. The volume profile is more of a simplified version of it. The volume is representing of the number of contracts or share traded for a given period. In futures and options, volume is based upon how many contracts were traded. The volumes can be plotted on y-axis and x-axis as well. I have a whole video about the volume, but this is just a simple explanation. So this is how the volume profile looks. As you can see, we have a volume profile for each session, and we have also the composite volume profile, which is automatically showing the volume from this whole range. As you can see, the volume profile is there are no any single prints, no poor highs and poor lows highlighted. There is just a value area and point of control marked on a chart, which is, you know, completely fine, but let's just continue. So what is the volume profile? The volume profile displays volume for each price on y-axis. Same as the market profile, it creates the bell curve distribution of volume for a given day, week or month. The volume profile shows us where trading was done, and high volume accept and low volume reject prices, although this is not always the true. It's one of the kind of rules you should be following. The market profile or the volume profile. The best thing to do, and people ask me this all the time, which one they should be watching, is looking at both for these sort of the agreements. The best levels of value and the best point of control come when these two are in agreement. As you can see, on this day, most volume was traded here at the bottom, which shifted the whole value area. But the most time market spent here. This is not the great profile in my opinion. This is the good one. You know, the time and volume POC are at the same level. This is the good one. This is the good one. This is also the great one. The most people nowadays put a more emphasis to volume profiles, as you know, we are at the age of electronic trading basically. The issue is that one huge order can skew the whole profile. Okay, so for example, if market would just kind of spend on this day, let's say market is spending the whole day here, you know, this is where your value is, where your main distribution is, but then when it trades to the upside, which whatever it did there, someone would just open some massive position in this market, and the position would be so huge that it would move the point of control to the upside. That's not good thing, right? Because the main volume distribution, which is the key, was happening down here. So this is the issue with the volume profile. But overall, I like to watch the volume profile as well. You just need to be aware of these things, and the best value areas are where the volume and time kind of agree with each other. The precision is not too important. Anyway, this is just a map for your trading rather than using entries and exits. What I didn't cover in the market profile video, and what is overall not really covered here, that besides a daily profiles, you can use a fixed profiles for whole weeks or whole months, you know, quarters, years, and so on and so forth. I don't do this. I never found any significant importance in that. What I much rather prefer to do is building composite market profiles when the overlapping days are relevant, and also looking at this composite profile, which I will cover in a bit, for more levels. Okay, so this is just a thing that, you know, you will often see people using weekly profiles or monthly profiles. It's possibility. I just don't do that. Volumes in the different markets. The In the cryptocurrencies, the decentralized markets such as crypto, you might find discrepancies in volume distribution throughout the exchanges. This is why you should be looking at volume data from major venues such as Coinbase, Binance, FTX, Bybit, or BitMEX. This is obviously, I think, the self-explanatory thing. If you will, I don't want to put any exchange to a blast, but obviously if you would load some on, for example, on TradingView, there are a lot of exchanges for crypto. If you would use some dead exchange where no one is trading, your volume profile wouldn't be look any good. So stick to these major exchanges. When it comes to actual volumes, the most volume is traded on Coinbase, Binance, but any of these things you will find that are very similar. Once again, the profiles are not standalone systems, that are tools of Confluence, so you are good to go with any of these. In futures, the centralized market, for any market of your choice, watch the corresponding exchange, CME, Eurex, NYMEX, etc. If you are trading CFDs, make sure to watch futures data. This is once again important thing. Let's say you decide to trade gold, and for gold is expensive futures contract to trade, and I don't like micro gold because it's too thin. So gold is one of those markets when it makes kind of sense to trade a CFD rather than trade micros if you don't have money for it. You still want to be watching the COMEX gold chart, okay? That's a better representation of volume instead of looking at CFD at Oanda or FXCM or whatever. The Forex OTC market doesn't provide volume data on spot Forex markets. Platforms such as TradingView show tick-to-tick data, which can be viable but not completely accurate. Looking at CME for currency futures data can give more precision. Overall, this is true. Although tick-to-tick data is fine, it's nothing too insane. That's if you think about it, that's more of a kind of a market profile basically for Forex. But I look at currency futures. For TradingView, the data feed for CME costs like $3 per month, so it's really a just something you'll just buy and use it. You can then look at the S&P 500 and Nasdaq and everything else. The stocks, the centralized markets, volume data are accurate. It's just you can completely find the volume profiles in stocks. Volume profile levels, the value area high and value area low marks out the 68.2 of the whole distribution. We can use the auction market rules presented in the previous video for trading around these levels. Market inside the value are rotational, outside of value they seek another level for acceptance. The point of control, the price point with the most executed volume, the naked point of control from prior sessions is a great magnet for price. Point of control is also marked on composite profiles, which I will show you in a bit. High volume node is not marked on a day-to-day profiles but on a composite structures. It is the high volume nodes accept prices. Once market accept inside high volume node, it often slows down as high volumes were executed there in the past. The low volume node is the void in volumes. The market often travel fast through out the LVNs until they are met with areas of prior high traded volumes. So this is the composite profile. You can see the levels here are marked out. The idea of that, this shows the volume for this each kind of period. I don't know exactly what this market is, but this is a lot of days basically, and the idea is that inside these high volume nodes, which are these things, where really the volumes cut off, markets are more rotational. Once they leave the high volume nodes, they go throughout these LVNs very quickly, which you can see with these kind of a V-shape reversals and overall fast moves. And then once again, when they accept inside these high volume nodes, they are more rotational, which you can see these are the edges here with the points of control there. You have a then kind of point of control there. So this is the overall idea of the things, which is once again great, but what I found out is that if you put a little bit more work into marking these levels, you will get much better success. When you are marking these levels, I use these colored lines, orange for POCs, green for bottom of the high volume nodes, and red for the top of the high volume nodes. I always connect them with a price action. I will show you this later on, but just slapping the line here without taking any price action into consideration is a little bit of a lazy approach. So I don't mark these levels so blindly. I always, for example, you can see that here was the POC is a little bit below the price, but here is this kind of a cluster, and this is where the inefficiency basically started. Market tested that, fills it and moves higher. It doesn't go all the way down to the POC. So once we will go to these strategies and marking out the levels, I will show you how this is done in more of a little bit of a better way. But the idea here is important because it will tells you what you can be expecting from the market conditions. Once you are inside this high volume node here, you are not trend trading. Basically, you are playing these kind of a rotations. Once you leave this level, except above, you will play some sort of retest, but you can capture a big trade because you can assume that market will move quickly from this level to this level, which happens here. Once again, as we hit this bigger composite profile, market will just start bouncing that inside. So mapping markets with composite profile using price action on daily chart with volume profile would not give you only strong levels of SR, but the context of what's about to happen next. This is something that I just talked about. I didn't realize that I have it here. This is a I think this is Bitcoin actually, and once again you can see that how these levels are marked in that. The POC is a little bit below the price, but you have these tests from a price action point of perspective, so you want to be more inclined to looking at that instead of just kind of blindly putting it there. This is the kind of a where the volume starts to edge, but more importantly you have a test in here, and kind of here as well as here, and these levels are right here. This is ETH. I'm sorry, this is not Bitcoin. I got a little bit confused here. Edge of the high volume node once again was a level of SR in the prior occasions, so I don't really care if I'm hitting it exactly here, but I want to see where market reacted to that in the past. POC is here. I am putting it inside this swing high on a daily because that's a more important thing to me. All these tests. Then go here and here. Realistically this volume is edging somewhere around these areas, but this is a clean level of resistance and support from the past. So once again, no brainer. Edge of the volume, this is sitting pretty nicely with these lows right here and these highs right here, so this is pretty accurate. The edge of the high volume node is more likely here, but we have this clean double top on a daily, so once again I'm moving the level there. There is the small high volume node here. This actually sits pretty nicely with these levels right here. You can say that there is a POC here, but there is this small kind of a cluster, but I would, if market goes all the way up here, I would just watch for a failure at the level, so I'm not marking that. Okay, so this is how I looking at these things. The composite profile just kind of gives me overall idea of what I can expect. Once again, we before this level was marked, we might have been inside this node. Once again, we swiftly moved throughout the LVN. We swiftly move throughout the LVN here. But when it comes to marking out the levels, you want to use a relevance of price action basically. Okay, so this is it for the volume profile. Once again, it's nothing too complicated, and we will slowly start to connecting things together after we cover the volumes by themselves.